day. Ira Epstein of Linn Associates with your agriculture update for this quiet Monday. I'm using that word. It is a quiet one. And it is April 8th, 2019, about 3:20 p.m. Central Daylight Time. Grain markets, I'm telling you, just very quiet. Now, the markets are looking at a weather system that's going to move into the northwest, and then it's going to hit some of the southern plains and so on. Could be a storm that lays out several inches of snow and then rain. And then, of course, we're in that roller coaster ride in April. In Chicago, we're 71 today. We'll be dropping back into the 30s and 40s. So you get these swings that are rather wild, but good for baseball today. Energy prices up as the market is concerned about what is going on in Libya, another potential oil cutback if a civil war breaks out there, as we've been writing about. Bonds and notes, as you can see, down ever so slightly in a stock market that hasn't done too much. So when we take a look at soybeans, the market right now for the week down 1/4 cent. It's the first day of the trading week. The market's having trouble right here. You can see the red line. That's the 18-week moving average of closes at 902.5. It's 898 3/4 right now. You can see how the market is just quietly going sideways. And at this point, one of the things I'd look at is the idea that you've got lower highs and lower lows. So that is a downtrend. That could be negated if the market were to get over 907 1/4. In fact, that could also potentially turn it to higher lows, higher highs. But right now, I think that you look at the market as having the bear trend in play, the lower highs, lower lows. The battleground has been, look at the red line. That's the 18-day moving average of closes. You've had it fighting this battle now for 6 business days, so that's quite a while that the market's been fighting there. If the market were to take out this 894 1/4 zone, well, I think it's, let me just check that price. It's 896 1/4, my eyes. 896 1/4 zone. The question is, does it have the power to go back down a dime from there at 886, or is it just going to hang here and try to figure out, well, I'll waste time. Momentum is flat, and I mean flat. So you had a very, very narrow trading day today. From the high to the low was 5 cents in soybeans. That gives you an idea how light, number one, volatility was, and it was a light volume day. When you come to the meal market, look at the 18-day moving average of closes. Now, the different pattern here is this. You have lower highs, but I could argue you also have higher lows. So the way that it comes out of right through here, be it last Thursday to Friday's range, is probably going to be indicative of what the market tries to do. Should it try to go up on here, I think it'll run into pretty stiff resistance, potentially at the 100-day average of closes. If it breaks under 307.10, I'd be looking at beans, see if they follow suit, and then the potential lies if they want to make a run for the lower Bollinger Band at 304. In the soybean oil, you're void of trend. You've had a lower low and a higher high pattern. This rally from down here culminated in a couple of days test last Thursday and Friday of the 100-day average, and right back now to the 18-day average. But I don't see a trend in that market. In the corn market, the trend is down. We still have a pattern of lower highs, lower lows. Therefore, the pressure is still on the market. It is admittedly oversold. You can see this right here. Any readings under 30 in the slow stochastic reading is oversold. If the market has the momentum to continue down, maybe it gets into that 355 zone. Should prices get back over 366 1/4, you would suddenly end up with the higher low, higher high scenario, putting the resistance into the 370 zone. In the wheat market, we have an outside day down. Now, it's at an important juncture, too. This market had made a run to the upper Bollinger Band. That was on Thursday, fell back on Friday, went over today, Friday's high, and then took out Friday's high and low, closing lower on the day. The settlement puts the market just over the 18-day average of closes. So while I'll put the swing line with lower highs, lower lows, it's balanced because you closed over the 18-day average of closes. Momentum is pointing down. In the sugar market, The 100-day average is proving to be the real resistance point. You can see that on the chart here. You missed again hitting the upper Bollinger Band. The seasonals at this time of year often turn to the downside. You have a pattern of higher lows, higher high. The settlement today at 1257 is under the 18-day average, so the bias is down. The two fight each other. Momentum is now at a point where is it going to turn down? That'll be the question. It appears to me the market's more caught between, be it the upper Bollinger Band and the 100-day average, and maybe the potential if it can get down to the lower Bollinger Band, which it has not done since back in February. In the coffee market, we're back to that old misery thing, where each rally attempt for those that are trying to be long, and you haven't had a buy pattern, you've had the lower low, higher high at best, but each move where you try to stay over that 18-day average quickly gets hurt and the market falls back. It's a market that isn't in a downtrend or an uptrend, but the overall bias is certainly to the downside. In the cocoa market, this market came alive, and it just did it from down here just over the 2100 level, and it has run like a son of a gun. It really doesn't give you a chance in. It keeps making the higher highs, got over the Bollinger Band a number of days, pulled back under, and it's staying over it with an embedded reading. Until the red line closes back under 80, the bulls have grabbed control of this market. Cotton market, same thing. The bulls re-grabbed control of the market by trying to form an embedded reading again, went up to the upper Bollinger Band, stopped there. The market had a contra-trend reading that did not work. It lost its embedded reading back here. Normally when that occurs, the market makes a run for the 18-day average of closes. It had one break, didn't make it down there, and then just turned on you and has made new highs. So once it got back over the 77.93 level, it was just basically a trap for the bears, and it's got them pretty well caught. In the cattle market, momentum is flat. The market has a pattern of higher lows and higher highs, but prices are under the 18-day average of closes, therefore the bias is down. So I define the trend, short-term trend, trying to be up but bias down, therefore they counter each other, and momentum flat. In the feeder cattle market, this market turned bullish today. If you look at the settlement, 150.57 is over 149.85, so you've got higher lows, higher highs. As long as you don't get back under Friday's lows, I think the bulls grabbed control. They'll try to keep the momentum up, the bias is up, and if they can clear this range, the next resistance point's the upper Bollinger Band. Support back at the 18-day average. Should you take out 148.47, just like that, you could have lower highs, lower lows. As I said, a strange trading day, very quiet but weird chart patterns. In the hog markets, backing off a little bit. I read a lot about hogs over the weekend because so many traders are thinking that this is a sleeping giant waiting for Chinese buying. The problem is U.S. pork isn't the only pork that the Chinese can buy. If you looked at soybeans, between our tariffs and their VAT tax on us, we're $3 a bushel, including freight, over, example, Brazil in soybeans. Well, our pork, as strong as it is right now, got to be careful that we don't price ourselves out of the market and other markets step in. But for the time being, the bulls have control of this, but it is a wide swinging market, very, very violent in between there. I finished up my first video report for you on stock indices. I did it on the Dow Jones. I covered in detail the seasonals, where they're at this time of the year, and there are seasonals that typically point up between now and into early May. That doesn't mean the market follows them all the time, but we cover it and give you a picture as to what they're doing. Remember, seasonals are just what the market's done in the past. If it always worked, we wouldn't be talking to each other. But then I give you the weekly charts, I'm giving you the daily charts, I'm showing you where the momentum has shifted, and it shifted today back into the bullish side just the way it's been in some of the others. To get the report, just go to our website at www.iraepstein.com. Under research, you'll see in our video area, click on the Dow Jones report. You'll be able to view it right then and there. I'm Ira Epstein. You have a good day.